Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Balmer Lawrie, a good dividend yielding stock and into logistics. So let's understand how the business is doing and whether you should invest in the stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Balmer Lawrie, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, it will help you also ask me questions on a daily basis. And once you get the $10 membership a month, you'll have access to my portfolio, my watch list, and also a lot of podcasts that I put up on different stocks. I put a podcast on stocks which I feel can go up on short term or can go down in the short run, and also on markets and specific companies. For detailed market or company talk that you have specifically with you, you can directly email me. Now about Balmer Lawrie, established in 1867, it is one of the oldest companies that is listed in the market. It focuses on logistics services across India. For more than a century, it is there. One of the largest and reputed listed player in the space. So the top quality management out there. The market cap of the company is around 2000 crore and has been a market leader in the space with global presence through subsidiaries. And we have seen a lot of logistics companies list, but this is regarded as one of the best with respect to very low debt and a very frugal management which works on growing through its own cash balance, etc. So the company per se on a fundamental basis is extremely strong. If you look at the financials of the company, then the sales had dropped. I mean, this is Q1, so this is June quarter of this year. So the sales dropped by around 37-38%, as it has done by for many of the companies that are listed in the market today. The profit, so the company went from profit to losses, so around 9.5-10 crore losses this quarter. A low debt, the dividend yield is around 6%. Between 5.5 and 6.5%, which is extremely good for a company that is also into an economy related business, which could do really well once the economy really does well. Return on equity of 14%, operating profit margin is of 13%. If you look at the performance of the stock, then stock has been a huge underperformer over the years, and there has been reasons for it, and I'll describe that later on in the presentation. But the stock has been underperforming the market as a whole and has not done well over the last 4 or 5 years. Although it started to do well from 2012 and till 2015, but then from 2017-18 onwards, it has been a downward journey. A sharp fall took place after the February-March fall that we have seen of over 50%, and has not recovered that much, although the recovery has taken place over the last 1 month or so. Numbers have been declining, as I mentioned, and now the company has gone into losses because of obvious reasons in this quarter, in the last quarter. Return ratios are fine. It is nothing huge, but the return ratios are pretty decent at the moment. Recovery of over 50% from the March lows, as I explained, that it has gone up 50 to 60% from the March low. So that is a positive in that regard. It has been a steady stock for years, so not gone down a lot, but has not performed exceptionally as many of the small caps have done. So let's understand why the stock has been under pressure and have been going down over the years. Uh, Heavy pressure due to the current situation, the lockdowns, etc., that has taken place. So the company did not do well in the June quarter, and the pressure started to come in from March onwards. So that is a prime reason why the company did not do well this quarter. But over the years, over the last 2 3 years, the company has gone down the drain because of the economic turmoil. So economic turmoil over the last 2 years have really hurt the business. This is into logistics business. This is into a business where companies where it will do well once people order a lot of things, or there are courier services that are going on, or there's a lot of ferry services from one state to the other, that you have to take products from one place to another, or large shipments from one place to another, etc., consignments. And that could only happen once the economy really does well, and there is a lot of movement of goods from, as I mentioned, one place to another. But what happened over the last 2.5 years is that economy has totally gone, you can say, at a very low pace, so at 3-4%, as the government has mentioned. What that has led to is many of the businesses in which many of the businesses which are more goods oriented, which are more products oriented, have really suffered. And service oriented business, online servicing businesses on in the internet have really grown further. So businesses which doesn't require movement of goods have really done well over the last 2-3 years, whereas those businesses which required goods and movement of goods have really declined over time. And that's what we say when we are talking about the core economy companies not doing well. And this is because of the fact that mainly goods businesses and is not at that level as it was, say, 4-5 years back, apart from FMCG products, which has done reasonably well. Apart from that, other businesses are not there, uh, probably. Prospects of things not normalizing for a few quarters is also a reason. So the investors understand that over the years, that over the next 2-3 quarters, it doesn't look like that things will normalize. And if it really does, then there are other stocks that they can play through, in which the companies would be more beneficial, like the auto play and etc. They play through that rather than the logistic companies as a whole. Competition from unlisted and unorganized sector is huge in this sector. And you know about the courier services across the road and etc. that you have. And plus you have services in which you can transfer your goods or home products straight away from one place to another, and the movement could be huge. So all these things, heavy competition also takes a toll on the core business of Balmer Lawrie. And the things could look extremely tough in the next 6 months to a year. So that's why nobody is looking at the stock, although it has run up from the March lows, but still on a long-term basis, but people are more or less looking at pure consumption plays rather than looking at logistics play. I think it will take another year or so for these all things to recover, and probably you'll get chances to get into the stock even at lower levels. So what needs to be done? Avoid for the time being. I still believe that there are many good stocks in the market that one can buy and sit on them for 2-3 years, rather than buying into logistics company and then worry about the results. Keep track of numbers. When numbers really go in the positive side and looks good, then only look at the stock. Even if it has gone up 50, 60, 100% higher, you'll have comfort of the numbers coming in. But only when bottom line improves you buy. So that is the thing. Profitability should be there, and growing profitability of 15-20% should be there in any company that you like to buy for 2, 2, 3, 5 years. It may continue to underperform, as I mentioned, that probably next 2-3 quarters will not be that great. So let's look at the stock probably midway in 2021, and have less than 5% exposure in such stocks. So this is my video on Balmer Lawrie. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.